Welcome back. This is episode 6 of the Dylan LeClaire Show. um, some pretty important stuff today. Probably my most important show that I've done. The usual. We'll talk a bit about the broad Bitcoin thesis and the macro, of course, later. But really, really big developments the past week. So, as I'm sure if people have been in the dark. The founders of Samurai Wallet have been arrested. A popular Bitcoin wallet with a CoinJoin implementation, non-custodial. MetaMask the SEC is going after ETH as a security and MetaMask as a broker dealer, and Consensus is suing the SEC. Phoenix, a popular a popular Bitcoin wallet, a Lightning non-custodial Lightning wallet, is shutting down in the U.S., getting off the App Store in response to the Samurai actions, which look to paint non-custodial Bitcoin solutions as money transmitters. The FBI put out a statement, and also some pretty legendary stuff from Zeus, a Lightning wallet, and Evan Clutis over there. So we'll get into it all. We'll kind of, I'll scroll through the feed and kind of give my stance on things, but pretty important stuff. They self-custody is the eventual choke point. That looks like the path, and not to be too paranoid here, but I think it's clear where this is going. So with that, of course, before we begin, I'm going to give a nod to, very much relevant to this show, Theya Bitcoin. Proudly working with them. They're sponsoring my video stuff. Check out their modular multi-sig solution. Multi-sig, you need self-custody. Theya is a fantastic solution. Any hardware wallet, mobile wallets, friend, advisor in the multi-sig quorum. Super clean UI UX. If not Theya, then you should figure it out yourself. But Theya is a fantastic solution. You should book a consultation. Because they are coming for self-custody. And again, not to be too conspiratorial here, but this is really important stuff. So shout out to Theya, Theya.us, Theya.us/Dylan. But you can just look them up. You don't need to use my link. Just figure out personal custody, guys. This is really important. Theya is an awesome solution. All right, let's dig in. So Samurai, what is it? What is a CoinJoin, right? Essentially, a CoinJoin is just a Bitcoin transaction, right? This is a CoinJoin. 4 equal sized inputs, pay fee, outputs, right? Samurai Wallet offered this solution and also had they had a whirlpool, which is essentially once you CoinJoin, you can kind of stay in a whirlpool. You can stay in a essentially, once you pay for the mix, you can stay there kind of queued up and be a part of future mixes, right? And the FBI and the 3-letter agencies of the world say this is money laundering, and this is criminal activity, and this is being a money transmitter. And Samurai never custodied any of the funds. Of course, they took a fee for the coordination, so maybe that's it. And I will say, obviously, they were a bit emboldened, even encouraging, following the Russian sanctions, whether satirically or not, and it looks like not satirically. The feds took it pretty seriously, saying, "Hey, Russian oligarchs, welcome to Whirlpool." But I think this is really, never mind Samurai Wallet, never mind, whether you think privacy is a crime, which I certainly don't. Again, this is just, when you boil it down, this is ones and zeros. This is information. Bitcoin is free speech. I posted on Twitter just yesterday in response to the FBI putting out, I believe it was the FBI putting out a statement on Bitcoin personal custody, and saying, it didn't directly say personal custody, but said non-KYC solutions and wallets and for cryptocurrencies. And again, guys, this really gets to the essence of it all, which is a non-custodial solution, whether it's a Lightning provider or a wallet solution, right? Like, if you have your 12 or 24 words, that's your Bitcoin. That's no one else's. No one else is holding it. That's yours. And I think, again, that they haven't explicitly said or banned self-custody. And we really need to hope that we need to take a stand so it never gets there. But I think this gets deeper into, if we're just thinking about the timeline of the ETF rollouts and just kind of the rapid fire sort of regulatory response in recent days and kind of coordinated push by the 3-letter agencies. This is the beginning. I mean, we've already been, I think, in the they fight you stage, but I don't think people were taking it seriously. And it goes back to, I think it was 2021, maybe 22, but they came for Tornado Cash, right? And I get it. Think Ethereum is a shitcoin, an altcoin. Say it's whatever. I agree. I'm not an ETH holder, right? I've used it. I've experimented with it, of course, to understand it. But I don't hold any ETH or altcoins. I hold Bitcoin. But Tornado Cash, which again is code, right? That Tornado Cash wasn't taking any funds. Developers wrote code for software, for open source software, and they were arrested. And Tornado Cash, the centralized solution, that their hosted implementation was shut down. Their website URL, but the system still was working, right? It's just code. They can't stop that. But they said any Ethereum account address or wallets that touch this are now OFAC should on the OFAC list. Essentially, saying this is black market money because it touched a certain part of software. So privacy is not a crime. And they already are criminalizing it. And I think this should have been expected. But after that happened in 21 with Tornado Cash, people said, oh, it's just altcoins. It's just shit coins, haha, Ethereum. And I think that's naive. And as someone that even myself has reformed my approach on all right, well, if I'm truly actually a Bitcoin maximalist, if I'm a freedom maximalist, what do I stand for? Do I stand for government? Do I stand for 3-letter agencies and the long arm of the law shutting down everything else but Bitcoin, or does Bitcoin win on its own merits? And I believe the latter. So I very much, I'm not a statist. I'm not rooting for any of this. I just think it's naive to think that it was not coming. So the Samurai founders are now in prison. They've been arrested. They haven't been convicted of anything. There's certainly going to be a legal battle, and maybe they, find some agreement or whatnot. But for anyone that used the Whirlpool, and for anyone that did use the CoinJoin mechanism, if you didn't run your own node, then your XPubs are doxed, meaning that the public key, which generates all of your addresses, your private key derives your public key derives all your addresses. Your public key is doxed in the hands of the Samurai server. And again, the privacy tool, it's like Whirlpool is not even that good of it was, and here's a good thread that I want to show you guys. This was a great thread by Laurent. So he said, for those that are listening, a thread about this statement made in Samurai's indictment from the perspective of a person who extensively studied the design of zero-link implementations and who has analyzed the on-chain activity of some crypto money launderers. Essentially, the TLDR, and I could read all of it, but a lot of the criminal money launderers types, right? They go to a Bitcoin mixer, whether it's a centralized mixer, right? A lot of maybe a non-KYC exchange or just, there's been people arrested in the past for just having a service where you send Bitcoin to an address, a bunch of people do, and they send it out, and it kind of, it messes up a lot of the heuristics. But with the Whirlpool implementation, a lot of these was very much just privacy advocates, right? I saw a stat. Well, they did billions of deposits, and only 100 million or a small number they actually identified as criminal or money laundering. So it wasn't 100%. It wasn't even 90 or 50 or even 10% of all of this was money laundering per se. It was a small, minute percentage, right? But shut down, they're arrested. But essentially what Lawrence says is, so, okay, I guess I'll just read it. For a long time, the behavior of crypto money launderers has puzzled me. It was literally as if they tried to avoid all best practices that you may expect from a privacy-conscious user, screwing their privacy and the privacy of others at the same time. They usually act like an entity that would try to storm the system, flooding the mixer with far too large inflows and leaving it as soon as possible before consolidating large chunks of funds just a few hops later. So essentially, right, you go through a mixer or, you know, maybe a CoinJoin implementation, you know, you get a bunch of UTXOs that has plausible deniability about who owns them. But then once you consolidate them all after, right, once you take 4 inputs and put it into 1 output, it's very easily identifiable as, you know, if person A goes through, mixes with person B and C, they create, 4 or 5 or 10 different outputs each. And then person A just consolidates all those outputs into one UTXO or a few different UTXOs. Basically, and it not only is it easily linked to person A after, but person B and C's privacy is also, de-anonymized after. These actors are literally the worst that can happen to a mixer because they ruin their own privacy while hurting the privacy of other users. It's a lose-lose situation, as we just said. But this behavior isn't a mistake. It's an intentional strategy serving a well-defined purpose. At some point, it appeared to me that these actors follow a strategy that I have compared to a go-fast. A go-fast doesn't try to remain stealth. It is a strategy far more simple and straightforward. Drive at maximal speed in order to maximally increase the distance with potential pursuers. Crypto money launderers follow a similar strategy. The long-term privacy of their transactions isn't a factor. The goal is to go as fast as possible through systems like mixers or exchanges used by other users just to widen the gap with analysts trying to track them. Repeat the same process as many times as needed, so the gap's wide enough that you'll be able to cash out, quote-unquote, peacefully. Is Whirlpool a haven for such actors? Quite the contrary. Whirlpool's design is based on the principle that better privacy is achieved when mixing is done more slowly, over weeks or even months. So as we said earlier, you use the Whirlpool, you mix, you pay for the initial fees, and then you're kind of just in a queue, right? And I know that's not the technical term for it. But then as other users come in and coins kind of churn through this Whirlpool, you get free mixing, and your coins continue to kind of churn around with all of the other coins that are in the Samurai Whirlpool. That was kind of how it worked. So your plausible deniability and, probabilistically how likely you are to be, linked back previously gets lower and lower. It's a low time preference sort of system, right? And again, this isn't a centralized, this isn't like someone, taking all your Bitcoin and putting it into a bag, a Scrabble bag and just jumbling it around and picking it out. It's like, no, this is, and that was a bad analogy, but this is non-custodial, right? You have control of your UTXOs every time. So, right, and again, you can kind of read all this, but is Whirlpool a haven for such actors? Quite the contrary. At the limit, best privacy is achieved when your funds never leave the system. Contrary to most Bitcoin mixers that try to provide the maximum anonymity as fast as possible, everything in Whirlpool, including the incentives model, has been designed with the exact opposite in mind. The end result is that Whirlpool is actually one of the less useful mixers, if not the least useful mixers, if not the least useful to crypto money launderers. And this is somewhat confirmed by the alleged 5% of criminal funds that may have traversed Whirlpool. So again, like 100 million that they identified with billions of deposits, 2 billion of deposits. So that's his thread, a great thread by Laurent. Let's go back here. 1 second. I'm gonna pull up my document folder here. But their domain was seized, right? And so this had some interesting ripple effects. I guess we can go to the ETH thing first. So this is kind of my thoughts here. And it was, I think it was somewhat coincidental. And again, there's some things about the ETH and I think, if we're looking at the Howey test and particularly, post, all right, like ETH was proof of work. There was the DAO hack. They rolled back the chain, centrally coordinated. They forked Ethereum Classic was the original ETH. The forked ETH was claimed as the original. Then proof of work to proof of stake migration, very much centrally coordinated, right? And Bitcoin has soft forks, right? But this is a hard fork, completely changed the consensus model, right? Very much led by kind of an insider team, the Ethereum Foundation. And again, I want to clarify, I'm not a statist. I'm not saying you should go to jail. I just, under the traditional, like a lot of people are calling Ethereum the internet bond, right? And you're like, why would you call it a bond? A bond is literally by definition a contractual security. So staking and all of this is, I would say it, under a traditional Howey test, it very much looks like a security. There's a spectrum somewhat of decentralization, and maybe you think ETH is sufficiently decentralized. Like, that's another debate. Again, I'm not cheering for the SEC here, but it's a much, much different conversation than Bitcoin. And many people don't think so. So the SEC, we don't really have too much insight into what they're saying. I think they got a Wells notice behind closed doors, but Consensus, who is very much one of the main pillars of the Ethereum ecosystem, creator of MetaMask, the SEC has hit them with a Wells notice for being an unlicensed broker-dealer. And so, again, MetaMask is a non-custodial wallet, right? If you have a MetaMask desktop wallet or app, you have your keys, but they do offer a swap service and a staking service, right? Which, again, non-custodial, right? So I can swap shitcoin A to shitcoin B through a MetaMask, but like similar to Uniswap, right? You have control of your assets, but they built the infrastructure. So the SEC is hitting them with a Wells notice and also saying ETH is a security. Consensus is going back and they're suing the SEC and Gary Gensler. So, I would, Gary Gensler, they couldn't even beat Ripple in that case. So I'm not too confident there. But I don't think the timing of this all is coincidental. So in response to that, and I'll get to kind of the tweet I just glazed over in a second, but in response to that, Phoenix wallet, a non-custodial Lightning wallet solution, unlike say a Wallet of Satoshi, which Wallet of Satoshi, a fantastic Lightning app, is custodial, stopped operating in the US some time ago, months ago, I forget. It was after the Binance CZ indictment. So I think, late 23. Phoenix is different because they don't custody your Bitcoin. You custody your Bitcoin. You have your 12 or 24 words. And if you don't back up that seed phrase, if you don't back up your channels, then you can lose your Bitcoin. So Phoenix is a software provider. They provide a service. They have shut down and they're winding down their US operations in fear of, essentially, you can read what they're saying. Recent announcements from U.S. authorities cast a doubt on whether self-custodial wallet providers, Lightning service providers, or even Lightning nodes could be considered money service businesses and regulated as such. This is a dangerous precedent, and we need to fight and stand up. And so here's Evan Kaludis, an absolute Chad, who has a similar sort of model of a Lightning wallet, and he's saying, we need to stand up. If Zeus falls, all other Lightning node operators are next. If Lightning operators fall, self-custody is next. This is the hill to die on, self-custody. If you don't agree, you were never in Bitcoin for the right reason. So get behind us or go home. Future generations are watching and depending on us. Always forward. Evan. You guys should follow Evan. Follow Zeus. Just an absolute Chad statement there. I've met him in person once or twice, but great guy and a leader. This is what we need. We need to stand up. Because this isn't just one Lightning app. This is the precedent. And again, I don't think, if you think that the timing of this all, of the ETF rollout and the promotion and, Larry Fink and BlackRock championing Bitcoin, right? It's about creating a walled garden, right? Bitcoin isn't a threat if it's all captured. You know what is a threat? And again, Bitcoin is not ready for this yet. The tech is still being developed. There's a whole lot of work to do. Never mind education, but the actual tech infrastructure needs to be 10, 100, 1,000x more robust. The rails need to continue to become more efficient and built out. But here, this is what I said in my previous tweet. They're going to go after self-custody because they need capital controls to properly execute financial repression. Capital sufficiently captured in walled garden ETFs. Widely adopted self-custodial Bitcoin used as a medium of exchange with privacy tools present an existential threat. I would encourage everybody to skim through the sovereign individual thesis, which in 1990 mapped a lot of this out. And they said a real threat to the growing, and this, I'm not quoting them verbatim, but the growing tentacles of the nation state and the welfare state as we go forward into the 21st century, and as through bad demographics and ever expanding debt burdens become more and more tyrannical, authoritarian, and essentially a surveillance state, digital cash that can't be inflated away, that can be used as a bearer instrument, that can be anonymous, represents an existential threat to the state as a construct, right? And the sovereign individual talks about the fall of the church, not the fall of the church, but the church as an institution in Europe, and how they had a monopoly on information, and they served somewhat of a similar purpose as the state, and the printing press kind of upended this, right? And not that Bitcoin is just one tool. It's a really, really, really important tool. There's going to be much, much more to do than just buy and hodl Bitcoin and wait it out. I think a lot of people were a little bit resting on their laurels and thought that we would just coast to Bitcoin becoming a global reserve currency. Like, no, that's not going to happen. And so, again, Bitcoin as an asset number go up. That's obviously a very important factor here, and it's a very important factor if you think that Bitcoin isn't just another asset, because Bitcoin can be $10 trillion, it can even be $100 trillion, and it's not a threat to the state if it's all owned and captured by legacy institutions. Mining pools censor transactions, there's no privacy, and there's no self-custody or minimal, very little adoption. Self-custodial Bitcoin as a medium of exchange with sufficient privacy is a fundamental threat. And again, play offense, not defense. Bitcoin is just speech. I could list off 12 words, and maybe I should have done that. I should have had 12 words ready to reward the first listener, maybe future episodes. But Bitcoin is literally just information. Privacy is not a crime. The nature of Bitcoin is that it is a completely transparent ledger. So a Bitcoin transaction, a non-custodial Bitcoin transaction that looks to improve privacy is not a crime either. And we need to fight back against any and all claims that it is. And especially second layer solutions like Lightning, like self-custodial Lightning, right? It's understandable that Wallet of Satoshi, a custodial solution, is going to go out, be a target for 3-letter agencies. Self-custodial solutions are different. And so I think one of the things I wanted to get at today is the reason why this is so important, and the reason why this is the case. And I think a lot of people kind of misunderstand why this is. And I forgot to pull up the source document here. Give me a second. But the picture I'm showing you here is from the liquidation of government debt. So can I pull it up? Here we go. Let's read this. And I've posted this a bunch on Twitter. But this is written in 2011. It was officially published in 2015. Right? So historically, periods of high indebtedness have been associated with rising incidents of default and restructuring of public and private debts. A subtle type of restructuring takes the form of financial repression. Financial repression includes directed lending to the government by captive domestic audiences such as pension funds, explicit or implicit caps on interest rates, regulation of cross-border capital movements, and generally a tighter connection between government and banks. In the heavily regulated financial markets for the Bretton Woods system, several restrictions facilitated a sharp and rapid reduction in public debt to GDP ratios in the late 40s and to the 70s. Low nominal interest rates help reduce debt servicing costs, while a high incidence of negative real interest rates liquidate or erodes the real value of government debt. Thus, financial repression is most successful in liquidating debt when accompanied by a steady dose of inflation. Inflation need not to take market participants by surprise, and in effect, it need not be very high. So, I think the more important thing is the emphasis on capital controls. Let's read this, guys. Hence, our analysis focuses importantly on regulations affecting interest rates with the explicit intent on keeping those low, and policies creating, quote, captive domestic audiences that would hold public debts in part achieved through capital controls, directed lending, and enhanced role of non-marketable public debts. So they need captive. What does that mean? It means that they in order to successfully execute financial repression, they can't have a monetizing bearer asset that you can take anywhere, that you can transact, that's not traceable, that you can use peer-to-peer, that you can use as a medium of exchange. If they just have another ETF that goes up, like the NASDAQ goes up forever, they can tax that forever. They can, and I'm not even talking about tax, like I'm not talking even the tax part of it. But like just yesterday, 2 days ago, the Biden admin, and I don't think this passes, talking about, let's do an unrealized capital gains tax for only the, ultra high net worth individuals, only high net worth individuals with over 100 million, right? Unrealized capital gains. Not only do they print money, which causes assets, like most of the asset inflation is because, most of the asset appreciation rather is because of monetary debasement, because of the inflation of the money supply. So they print money, they increase the price of your house, your stocks, everything, your gold, your Bitcoin, and then they tax you on those gains. And now they want to introduce unrealized capital gains, so you don't even sell the thing. It rises in political currency terms because they printed money, and then they steal it from you? Oh, it's only the 100 million, right? It was a temporary, small tax in 1913, a small income tax. It was only for the richer, the high income group. Now everyone gets taxed. Some people get taxed at 50%. Right? So this is a steady, gradual encroachment of freedom, of property, right? Another example, the Bank Secrecy Act. I posted about this yesterday. In 1970, they said 10 transactions over $10,000 must be reported from the bank, from the financial institutions to the government, right? 10,000 in 1970 is the equivalent of 85,000 today. The limit's still 10,000. Soon $10,000 will be, how soon is $10,000 going to be just the average the average weekly income, right? probably far away from that, hopefully. But monthly income, sure, whatever. But the point is that, think about it, $84,000. That was the equivalent of 1970. Don't worry, it's only for large transactions in fiat terms, and they've never changed it. So when they say, only unrealized capital gains for $100 million net worth, it's like, where we're going, everyone's going to be a millionaire. Everyone's going to be a decamillionaire too. Because where we're going is, it's not unprecedented in world history, but it's unprecedented in U.S. history. Right? Inflation's reaccelerating. We have Fed funds at 5.5%. Inflation's reaccelerating. We're running 7% deficits, and the debt to GDP is 120%. We're paying $1 trillion and increasing trillion, and still compounding in interest expense every year over the last 12 months we paid $1 trillion. So, guys, this is, in order to execute this playbook, they can't have a currency that you can take anywhere in your head, that you can just escape from and insulate yourself from the consequences. They want to hoard all the Bitcoin in the ETFs. They want to ban or severely discourage or cripple second layer solutions, self-custody, sovereignty tools, and people, developers, founders, are going to be targets. So I think it's just important to understand, and I'll go through. Here's more capital controls. Capital controls. This paper, the liquidation of government debt. Again, I've talked about it. I've posted it on Twitter like 20 times since 2020, maybe early 21. Capital controls are a must. Capital controls. Capital controls. Capital controls. Capital controls. They need to. They can't regulate Bitcoin, but they can regulate the on and off ramps, and they can heavily KYC, and they can make sure that they can attempt to make it criminal to use Bitcoin peer to peer. And so, like, guys, this, I mean, I'm an optimistic guy, but like, there's first they laugh at you, or first they ignore you, then they laugh at you, then they fight you, then you win. I think a lot of people thought that then they fight you stage was like over, or we're just gonna skip over it, and Larry Fink is our hero, and we're gonna go to the moon. And it's like, if you really believe the Bitcoin story, or not the Bitcoin story, but the reality of what's happening, that we have the monetization of this new digital bearer asset. It's the biggest idea of our time. It's the biggest idea and the biggest total addressable market in the world, money. And you think what we were just going to kind of like waltz in and just like upend traditional power structures and call it a day. That's a bit naive. And so, right, like, this is self-custody is an absolute must. Privacy is a right. Bitcoin is freedom of speech. They're going to attempt to really, really heavily discourage, dissuade, potentially criminalize all of this. And people are going to need, you're going to need to stand up, right? If your government's unjust, then you're going to need to. And so I'm not saying, I think Phoenix was taking a just precautionary step and saying, hey, I don't think they've gotten in trouble yet, but I think they don't want to face that. With Samurai, obviously, they provided a solution, but they were openly, even almost kind of like mocking authorities and saying, hey, we encourage this. And we're obviously, one of them was in the US, one of them was in Portugal, the founders. And so I don't think that was the wisest decision in the world, to be openly kind of mocking the authorities about, and encouraging Russian oligarchs to use their service. But I think the second order effects of this are going to be, hopefully, an explosion of anonymous developer activity, pseudonymous, to create. We need tens, hundreds of apps like Phoenix and wallets like Whirlpool, Samurai, because without that, we just have a new NASDAQ index, and we're all rich, but Bitcoin won. We're all Bitcoin number go up. Bitcoin's $1 million, but what did it change? It's just like, oh, you levered up and bought real estate in the 80s. Great, you got rich, you got rich on real estate, but you didn't change the world. And I think great. You all a lot of Bitcoin people are already rich, right? I'm not. I guess depends on your definition of rich. But like, I think there's a bigger fight here. There's a bigger fight, and it's we have an opportunity to really, really enact change, long-lasting change, in limiting the scope and scale of the theft that is a fiat regime, of a government regime that is intent on perpetual war and a surveillance state. And Bitcoin is just a tool, and ultimately people need to utilize that tool. And if everyone, bends over and says, or just gives up, sits down, calls it a day, then that's a fail. And then it failed. And okay, number go up, great. But IBIT owns 10 million Bitcoin, and what did it all end up? What did it all mean in the end? Another asset to pump. Great. So, I mean, this isn't meant to be a doomer recording, because I'm still very optimistic, but I think a lot of people were caught off guard, or actually still don't understand the implications of this all. So yeah, that's I think that was kind of my what I wanted to get across today. And I will go to the last thing here, which is very much related to all this. So, and this relates to the kind of the liquidation of government debt, PDF. And, we talked about it in the previous couple podcasts. Inflation is returning. Inflation is reaccelerated. Here's annualized 3-month core PCE. And again, there's so many little inflation indices and all this stuff, and what's in core, it's like, okay, well, it excludes food and energy, but food and energy have already ripped. But it's a more stable, food and energy are more volatile. So this is a stable, quote unquote, benchmark of inflation. And on a 3-month annualized rate of change, it's gone from under 2% to 4.5%. That's really meaningful, and that means that 12-month rate of change is also going to start bending upwards. So everyone claimed victory over inflation early in the year. The Fed was going to cut 6 times. That's all been walked back. So what does that do? What does that mean for Powell? What does that mean for the Fed? Well, you have a few options. You can hold, do nothing. Rates are at 5.25%. Interest expense is at a 25-year high as percent of tax receipts, GDP. It's compounding. You can raise interest rates further. Interest rate soars. Yeah, you're fighting inflation, but a lot of the stuff on the lower end of the spectrum, meaning like the lower class, credit card rates, auto rates, right? That makes it into the inflation basket. Maybe not officially, but that's going to put a real stress on the lower end of the the lower class, and anyone that needs to roll over debt in the corporate sector or real estate. Or the third option, and I kind of went out of order, is they cut. And I think they're probably not going to cut too much this year, but the fiscal situation is terrible. And it's terrible because the administration is going full Weimar. And that's a bit hyperbolic, but they're issuing debt at an unprecedented rate. Or really not even issuing debt. They're spending more than they make, more than they take in tax receipts at an unprecedented rate. Our deficit as a percentage of GDP is only ever been higher in wartime or COVID or recessions, and we're not in any. We have a couple proxy wars, and the last time interest expense was where it is today, right? And I'll pull it up. I'll put it up on the trading view chart here. I mean, look, guys, the last time interest expense was where it is today, right? It was 1997, and federal debt to GDP was 60%. It's 121% now. So we've never been in as worse of a spot, and there's no one at the helm. There's no one steering the ship. So, not to be conspiratorial, but when you view what they've said for the last decade, before COVID, before this inflation shock, before the debt bonanza of the last 4 years under the Biden administration, just after the great financial crisis, they said, look, we're headed for a sovereign debt crisis. We need to liquidate the sovereign debt. How do you lower the sovereign debt? A steady dose of inflation and capital controls. So inflation's not going anywhere. We still need a decade of interest rates above interest rates below the levels of inflation, financial repression. Bondholders get screwed. Debt holders get screwed. Savers get screwed. Hard assets win. But what happened in the 30s? What happened in the 70s? The U.S. defaulted on its gold twice. The FDR seized your gold in 1933, literally said, well, you'll throw you in prison if you don't hand over your gold. And then in 1971, Nixon told nation states to F off. And they said, we're not giving you your gold. You know, on a post-Bretton Woods global gold standard with the dollar as the reserve currency. So, like, if you think that, oh, you know, the Constitution or the Bill of Rights or, you know, they couldn't do that. They can. They absolutely can. This administration and, you know, the three-letter agencies, regardless of red team or blue team, have shown that they don't care about the rules. So, look, like, I talk about the ETFs all the time, right? It's great for institutions looking to gain exposure. It's great for liquidity into the asset. It's a phase of its monetization. But this can either be an asset that is another, you know, run-of-the-mill asset. It's probably going to be one of the most valuable in the world, if not the most valuable in the world. 10 trillion, 20 trillion, 50 trillion, 100 trillion even. And it's just an asset. And it's just number go up. And it just outpaces the inflation. Or this can be freedom money. It can be freedom money. And it can be a liberating force from tyranny and authoritarian governments and governments at large around the world. And there's a lot of work to do. And there's a lot of code that needs to be written and a lot of scaling that needs to happen and a lot of education. But that's the fight. And in the Western world, we're a bit oblivious to it. You know, it's like number go up. Great. But we're just starting to see that governments and traditional power structures aren't just going to roll over. Shocking enough. So be ready, right? What side are you on? Because I think this is a really, really, really important period, right? We're going to look back at this time, not necessarily this week or month, but we're going to look back at this previous 10 years and the next 10 years ahead as a pivotal time. And either we win or we don't. And that's not to say, you know, we're going to burn down governments. I'm not saying that. I'm saying that it's going to put a restraint on the overreaching, you know, arms of the state. If you take away the state's ability to steal from you and government becomes a service instead of you know, compulsory forced at gunpoint, we get a much more ideal system and a much more balanced power structure. So, yeah. All right. Well, I wasn't planning on doing something today. We'll talk more. I was asked to talk about the yen. The yen's imploding, and Bitcoin for corporations next week. That will be exciting, and some more maybe interesting, fun details for you that I can't share, but maybe I can share next week. So I'll call it there. I would really ask people to like, subscribe. If you're watching this on Twitter, please tune into the YouTube channel, like, subscribe there. It would mean a lot to me, and I appreciate everyone tuning in. We got some fun times ahead, and we're gonna win. Cool. Thanks.